The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everyone. It's about 1:45 Chicago time. Anyways, the markets are kind of flat and real quiet for the moment. So what I thought I'd do is I'd open up the room and just start the broadcast. Before I get started, I have to go over the disclaimers. So I'll probably take 5 or 10 minutes to go over that. Then what I'm going to do is I'm going to cut up the trade setup that you see inside the training room every morning. So we'll knock that out. We'll go over the setup, some of the buzzwords. I'll break down, why we're looking for certain things, some of the normal things that we expect to happen. And then after that, we're just going to get it right into a live environment. So what we'll end up doing is we'll go over the setup and take that setup and look for the easy and obvious inside the training room. Okay, so that's the game plan this afternoon. So along the way, you have the opportunity to ask questions. Okay, what I do is I'll go over some observations and some points. You're going to hear me labor over probably 3 or 4 different things, and I'll pound that away because that's probably the biggest traps that people kind of fall into if they're struggling or spinning their wheels or what have you. Some of the few things that I've observed over day one of being in the room, I'll point those out. And the idea obviously is, have you avoid that situation, or hey, you might be falling into the same traps, and you might say, hey, you know what? That's exactly what's happening to me. So if you are brand new, this is going to be, like I said, a great cheat sheet for you. All right. And if you are a returning CFRN member, like I said, this is your opportunity to spend time in front of the screens, get to know the personalities of the market you're trading, ask questions, and learn it all in slow motion. Okay? So that's what we're going to end up doing in the next hour. Okay, I'll cut it loose at around 2 o'clock. And if in the next hour if nothing's happening, then I'll cut the webinar short and we'll go from there. Okay? All right. The disclaimer. All right. Again, I could just throw it up there, tell you to look at it, and then throw it down under the blanket, and hopefully you understand or read what I just put up there. But I've been doing this for almost 25 years, so I really don't like to just put it up there and tell you to take a look at it. I like to go over it. So basically, the disclaimer is out there really to scare the pants out of anybody that's really brand new to futures. And it should be, because, the label is basically, look, you can lose everything and some in your trading account, because this is a leverage market that we're dealing with. And if you don't have a trading plan, if you're not using stop losses, if you're not engaged in what's going on in the marketplace, those disclaimers are going to hit you right smack dab in the face. Okay, and I've really, over the years, have really seen the good, the bad, and the ugly when it comes to this market. So it needs to be talked about, and it should be highlighted. Just an observation over 8 years, I think, that the training room has been around. Usually the guys that come to CFRN are pretty numb to this, all right? They've been to that room and this room, and they've learned that method and this method along the way, and basically they're just getting their butt kicked, all right? And they're kind of frustrated. So by the time they get to us, this disclaimer means nothing to them. So again, just an observation, but again, for the guys that are brand new, this is a serious thing. Okay. The good thing is, and I'm going to go over this shortly, is that with CFRN, you're going to have a set of rules, right? You basically have, it says 3, but there's basically 4. All right. You're going to have a trading plan then, right? You're also going to be using stop losses. So every trade has an 8-tick stop attached to it. Okay. You're going to be on a 4-tick range chart. Okay. That means holy smokes, you're going to be engage in the market. Okay, you're looking at the market under a microscope, so you have to be in front of the screens, and you need to be engaged in what's going on. You got to be in tune with the news reports are. CFRN, they advertise they don't trade around news reports. Okay, that'll be another thing. Okay, so you're going to do all the right things, all right, with the CFRN training plan, all right, so that this disclaimer doesn't become a reality and hit you right smack dab in the face, all right. Now, in the end, if you do all the right things, and you place a stop, you're in front of the screens, and you're engaged in the marketplace. Look, if you place a stop loss and the market does a complete 180 or some crazy news item comes out, there is the risk of your stop not being elected. Okay? It's not well advertised out there, but that is a reality. I've only seen it probably happen 2 or 3 times, but it's a possibility. The good thing is the fact that you are in front of the screens and engaged in the market and following some rules, you'll be in front of a platform. Okay? And if all hell breaks loose, you'll be staring at a DOM, and this is where we buy and sell. This is the tower. This is called the depth of market. And in the green, we'll left click in the green if we are expecting prices to go down. That's how we make money. And if we'll left click in the red, and if prices go down, we'll make money. But like as I said, if something does come out newsworthy and the market goes into a tailspin, at least you're in front of the screen and a platform. You can hit this exit at market and cancel hotkey and get the heck out of Dodge, and then assess what the heck just happened. All right. So again, there is risks in trading futures, and we just don't want to ignore it. And we like the transparency and not hide behind things. The other thing too is the funds that you put into a trading account should be risk capital. All right. So if you ever go down the path of opening up a trading account, you'll be asked that question somewhere around the online application process. They'll ask you what you do and your experience and all that stuff, and the money that has to be in the account. If you lose that, it can't change your lifestyle. So again, that's the second part of the disclaimer. All right. Second disclaimer, my relationship with CFRN. No, Bert from Daniels Trading does not work for CFRN, and CFRN does not work for Daniels Trading. We're independent. Okay, it's their indicators, their trading tools. Okay, they're proprietary. Okay, it's theirs. So if you go down the CFRN path, okay, what you're going to end up doing is you're going to end up owning the indicators, and in doing so, their indicators are built inside my platform, and the platform that I support is DtPro. That's what you see up here. The indicator set is right here on the chart. This is the same one, the same platform that Michael and Dwayne are using. The indicators are real easy to apply. It's really just a right click, a few right clicks, and there they are. So that's real simple. And my role in this is the brokerage, the platform, the execution part of it. If you, in the end, after the trial, you say, hey, I want to do this. I want to be a CFRN member. Money that, the exchange of the money through PayPal, that's between you and them. Anything on their website, anything in their members area, the Logic 247, okay, the daily doubles, the concierge trade alerts. If you have, the Thursday night workshops, all the stuff that's included. If you have any issues with that, you would reach out directly to them. Valerie is a good asset. She was just added about probably 3 months ago, so I know she's answering emails. In the end, Dwayne's on the radio. Dwayne's doing one-on-one mentoring. Michael sometimes is doing planes, trains, and automobiles. In the end, if you can't get a hold of him, the big plus one is that you can always get a hold of me. All right, I'm at the trade desk. So if you're struggling with the platform, or hey, you got a question about a setup, or hey, was this a good setup or not? You want to look at charts together, what have you. That's all fair game. And you could call the desk here and ask. So if you decide to go down the CFRN path and you elect to go, do it through DtPro, we're basically going to spoil you at the desk, and we'll do the best we can to support you and try to make you successful. All right, so that's the game plan. It's one of the reasons why I do CFRN Thursday. I take an hour out of my time. There was enough hand raises in the beginning where guys said, look, man, things are fast. I'm brand new. I can't absorb what the heck's going on. Can someone slow this car down? And there were some guys that are on the trial that said, look, if you want me to commit to this, I need a slowed down version of this. So I said, you know what? I'll do it. All right. And obviously there's a mutual benefit. So that's why I take the time out. I'm in the room every single morning. I know the setup. If Mike's out or he's taking a break, if I see something going on, I'll point it out. I can answer questions. So you'll see a lot of that. I'm always in the background. I let Mike do his thing and try not to get him off point. Really, my thing is this 1 hour little presentation on Thursday, where I get to really talk and break things down for you guys. Okay. So again, ask questions. So I'll know the answer. So just ask. This is live. And so I just want to give you advance notice. My phone starts buzzing. I'm just going to put you on hold and I'm going to hit the mute button. I haven't, turned my back on you guys. It's just I'm answering the phone. So that's just to let you know in advance. All right. So here, let's just start from scratch. All right. So we're going to go over the setup here. And this is the same setup that you see Michael doing in the trade room. It's the traditional slingshot setup. Okay. So the first order of business is the time frame, and we're always on a 4-tick range chart. Rarely we might be on an 8-tick range. If you are just hell-bent on trading the mini Dow or the NASDAQ or the mini Russell right now, my suggestion to you is, a way to slow things down is go to an 8-tick range. But for the time being, what you're seeing in the room is a 4-tick range chart. All right. So, for example, if you have DtPro up and running, chances are you're on a time-based chart. You might be on a daily. Most of the guys are on a 30-minute or maybe an hourly or a 5-minute. The idea is to get to the range chart. So, see the little 5-minute upper left-hand corner? It says 5 minutes here. Just select the drop-down box and go down to custom. Select the range bar, because you're going to see a box that opens up, and make that one look like a 4. All right, then hit OK. You're staring at an ES, mini S&P chart on a 4-tick range. One of the first traps that people fall into, they select the drop-down box. I go to custom, but they hit the tick bar. Okay, they make that 2 look like a 4, and look at the big difference. So this is that same ES chart, but on a tick chart. Okay, if you're staring at something like this, it's just dead wrong. So you need to get on a range bar, range chart. Okay, it's much smoother. And, the bottom line is the height of each candle is always 4 ticks in height. All right. So why is that important to you? Well, in the room, you're going to hear Michael talk, call out some highs and lows. And you're going to wonder what the heck is he talking about, especially if you're new. So what he's doing, he's going to be proactive. So in other words, if he knows the height of each candle, all right, he can place orders in advance. Okay, he can place orders. So what he's doing is he is buying potentially buying the market on a stop or selling the market on a stop. So if the market is trading right about here, all right, because he knows the height of each candle, okay, if the market starts taking off and everything qualifies the rules, he's going to stop himself in on the long side and go with the momentum. If it's a setup to go short and everything qualifies, he could be proactive and place a sell stop. All right, he's entering on a stop, okay, above or below the current market price. All right, so, what had happened in the beginning is, let's give you an example. Well, maybe I won't see one here, but there would be a run, maybe a run in one of the markets, okay, and everyone would be asking, how the heck did you get into that trade? And the idea was he was buying and selling it on a stop. He was getting in on momentum. Okay. Trying to find an example, but I'm not seeing a clear one. So that's why he's doing that. All right. So just so you know ahead of time, if he starts calling out some highs and lows, he's preparing himself to get on a stop, whether either above or below, depending on what's going on. Okay. All right. So long discussion. You need to get on a 4-tick range chart. That's the time frame you're on. Okay. Let me erase that. Okay. So now we're on the time frame. Okay. Now we're going to work on the top portion of the chart. That's this part here. All right. So here we go. The red and blue line is referred to as the MA1. Okay. The green line is referred as the BBC. That is short for bullish and bearish cross. Okay. Together makes up step number 1, which is this. When the MA1 is crossing the BBC, okay, that is step number 1. If the MA1 is red, okay, that is a bearish cross. Okay. If the MA1 is blue, that's a bullish cross. The one that's highlighted here, okay, is a bearish cross. And it's a bearish cross because the MA1 is red. So now I want you to think about color. Okay. I want you thinking about, let's see how I can delete this thing. Stand by, guys. I don't like these pop-ups. There, I'll turn that off. Okay. So I want you thinking color. So if the MA1 is red, I want you to be thinking, hey, there's a potential selling opportunity. If the MA1 is blue, I want you to be thinking, hey, there's a possible buying opportunity. Okay, again, the one that's highlighted is a potential sell opportunity. Okay, so if you're brand new, the big thing to note here is I didn't say go short, go long, go short, right? I said we're looking for shorting opportunities or buying opportunities because that leads us into step number 2. All right. So step number 2 is this. Let me get rid of this here. Okay. Step number 2 is after the cross, we identified as this being the bearish cross. The normal thing for the market to do is to gravitate or flag toward the BBC. That buzzword, the green line, is called the BBC. That's a normal thing for the market to do. Okay, so that's what we're looking for. All right, so not only are we looking for the touch or the test, okay, we're looking for the close in the direction of the trend. Okay, so if we're looking at a red MA1, which is a bearish cross, then we are looking for a red candle. Okay, so ideally, if we want to stack all the probabilities in our favor, we want everything to be the same color. All right, so if we're looking for selling opportunities, ideally we want everything to be red. And if we're looking for buying opportunities, we want everything to be blue. That is the easy and obvious trade. Okay? And you'll hear me talk about it a few times. So we're looking for the step number 2, which is, hey, the normal thing after the cross is we should gravitate toward the BBC. And we're looking for that down the close. Okay? That's step number 2. Now, the curveball. What if we don't get to the MA1 or to the BBC? All right? That's going to happen. So what I'm going to labor over in a few minutes here is what I'm going to suggest to you and highly recommend as soon as you get this cross, which happened here, you're going to engage the trend line and get in the habit of drawing trend lines along the way, okay, in step number 2. Because there's going to be cases where the market has so much bearish or bullish momentum, it won't get here. It won't get to the BBC. It'll make an attempt and just fall apart, okay? And if that happens, and we have step number 3 below us that we're going to go into, if that's there, you're going to take action, okay? Because that's telling you a lot, all right? So, again, we're looking for an attempt to the green line, which is a normal thing, but it close in the direction of the trend, okay? But be aware, in the process, we may never get here, all right? And if that does happen, we'll take action, all right? So, check step number 1, good. Check number 2, step 2 is good. Now we're working on the oscillator portion of the chart. This is the slingshot, okay? The trade exists down here below. It happens right here in the slingshot. Now I'm going to go over the reason why that is, all right? But here are the buzzwords down there. The red and blue line is referred to as a cycle, okay? Here's what the cycle is telling you. Guess what color the cycle is? It's red. We have a bearish opportunity here. We have a down close, another red candle. Well, guess what? We want to see a red cycle. Okay, that again is putting the probabilities in our favor. So what the cycle is telling us is, look, the momentum is bearish. All right, on the 4-tick range in the NASDAQ. Okay, it's telling us the momentum is bearish. Okay, that's what the cycle is telling us. Over here, look, fast forward it, it's blue. So what do you think that's suggesting? Well, the momentum is bullish, right? We're looking for the market to potentially advance. All right. So that's what the slingshot down here is telling us, the cycle. Okay. All right. So we know that the momentum is going down. What about the green line? This green line is referred to as, there's nothing fancy about it. It's just the green line. But the green line pulling away from the cycle in conjunction with the price action here, it's saying, look, this price action is just a pullback in this ongoing downtrend. All right. The space between the green line and the cycle, as highlighted here in yellow, that yellow arrow, that's referred to as divergence that Michael is talking about in the room. He calls it separation or divergence, whatever you want to call it. The reason why this is labeled the slingshot is because it's like pulling back, you know, the rubber on the slingshot. The further you pull it back, the farther it goes. All right. So that's why it was labeled the slingshot. You're just pulling the cord back. All right. So look, we're in a downtrend. There's some momentum, and this little normal thing, this pullback to the BBC with the down close, that's just an air pocket in this ongoing downtrend. So when step number 1 is present, step number 2 is present, and our eyes gravitate toward these slingshot, and we have that separation or the divergence, step 3 is checked off is checked off. So there's nothing left to do but to basically go inside the DOM or the tower, which is this thing here again. This is where we're doing all the buying and selling, right? And get short. And if the price goes down, we make money. If it goes against us, we're losing. All right? But the bottom line is every trade, right, as advertised, has an 8-tick stop attached to it. So if you're brand new, you're wondering, what does that mean to me? If you're trading gold and crude, which is traded often in the room, you're risking $80 a contract if you're dead wrong. Okay, if it's the soybeans or the S&P, it's closer to 100. If it's the mini Dow, it's closer to $40. Okay, now why is it all down here? Because here's the normal thing. Step number 1, we get the bearish cross. Step number 2, it does the normal thing. The market pulls back to the BBC. We get the down close. Step number 2 is done. Okay. Our eyes are gravitating toward the slingshot. We got a red cycle, which is good for the home team. And we got the green line pulling away. That means we have space. And that means we have divergence. So step 3. The normal thing for the market to do, okay, the green line is supposed to come down and go into the cycle. That's the normal thing for that green line to do once it pulls away, okay? And in doing so, the market is going to make a new pivot low, all right? And when the green line and the cycle connect, it's right here we get out of the trade, okay? We get out right here. And the reason is the normal thing for the green line to do is do this. Pull away, close the gap. Pull away, close the gap. Pull away, close the gap until our momentum starts to get bullish and turn blue. So now you're looking for the green line to get underneath and create bullish separation or bullish divergence. All right. So you end up selling this, selling this, selling this, or buying this pullback or buying this pullback. As long, and this is the biggest thing, and we're going to talk about this first thing when we get into a live environment, as long as the market is trending. We're making higher highs or lower lows. Okay, the market needs to be trending. And if it's not, that is our first disclaimer, our disqualifier. We don't take any action, don't push any buttons. Okay, the market needs to be trending. Okay. Now, if you're brand new, what are you signing up for? Well, you're on a 4-tick range chart, right? So now you have to be in front of the screens. You're signing up to follow 4 set of rules, right? You're going to have some discipline, right? Number 3, you're not going to learn to pick the top, and you're not going to learn to pick the bottom here, and you're not going to learn to trade it from point A to point C. You're learning to take a piece out of the middle. That's what you're signing up for. All right. And along the way, there's some risk management rules. Move the stop, move the stop, move the stop, move the stop until, guess what? The green line gets into the cycle and we cut the trade loose, right? That's what you're signing up for. So you're gonna be scalping, okay? And you're gonna be placing a lot of trades, okay? You're not gonna be risking a lot of dollars, okay, per trade. And along with all the rules and the things that we just went over, you know what? You're going to have to be pretty darn good at this thing here, which is the tower, okay, where we buy and sell. All right. Now, if you're brand new to trading, this takes some time, okay? So in the training room, you're not in the room to follow Mike and mirror what he's doing. You're in there to identify the setups, okay, and practice finding the setups and then going inside the DOM and actually pushing a button. That's what you're training your eyes to do, okay, and your hands to push, okay? That's what you're learning, okay? Yes, it's not real money in demo mode. We all get that. So the emotional part of it is not the same. It's the functionality of pushing the buttons and training your eyes to do all the rest of the stuff. That is, okay? So you want to get to the point where you're not relying on Mike to giving you the trade ideas, right? You're learning when the room closes, you have the confidence to go into the market and push the button yourself. That's what you're learning. All right. So that's what you're signing up for. Okay. That takes time. Okay. It doesn't take a week, doesn't take 30 days. It may take longer than that. And unfortunately, some guys bring other habits to the table. And so they have to cut those loose before, they really get into the groove of things. Okay. Whew. That's it. I need a drink of water after that. All right, so now the game plan is we're going to go into the live environment, okay, what we're seeing here, and put some trades on, okay? So let's do it. So, I cannot see the question box. It's driving me nuts. Oh, here it is. All right, let me set that to this side. All right, so here we go. First order of business, are we trending? That's the first thing that should be on your piece of paper if you're brand new. All right. Are we trending? Are we making higher highs or lower lows? First market I'm staring at is crude oil. The one thing I want you to do and get in the habit of doing is hitting that red zoom out button. Okay. Sometimes you get hypnotized by what you're looking at on the screens in the morning. You're looking at Mike's layout. Okay. And he's got 4 or 5 different charts floating up. They're all floating, right? Side by side. Okay. And they're blowing up pretty good. Well, you can't really see what's happening left, right? Can't see what's happening over here. And that's important if you're looking for markets that are trending. So get in the habit of hitting this red zoom out button, okay? Because if you look at the crude, man, we were trading sideways for a long period of time today. There was a lot of noise in between here, okay? This is where people lose dough right here, okay? Because they got caught in the chop, all right? They would have taken a step back and just hit the zoom out button. They might say, you know what, it's not trending, okay? And if you're unsure about it, one clue, look at dynamic support and resistance, how they're side by side. That's a good clue, okay? You can almost see it's side by side. That's not good, okay? So for a while we were trading sideways there in the crude. I tightened it up a little bit. We're starting to close underneath some important levels of support. So right now I would say, you know what? The crude has the potential to fall here. So now I would start getting excited about getting maybe short the crude here. Okay. And look at here. Not only that, we have step number 1 in play, which is the bearish cross. So we have a red MA1 crossing the BBC. Okay. So as I said earlier, what happens? So we checked off 2 things. Hey, crude was trading sideways and now we just broke support. Okay, we identified that by hitting that zoom out button that Bird's crazy about, right? We're trading underneath it. All right, so we're trending. And then we also identified we have the bearish cross. We have an MA1 that's red crossing the BBC. The next thing that you want to do is engage your trend line right here. Okay, this thing here. Left click, engage the trend line. Okay, because we're looking for step number 2, which for the market to do the normal thing, which is pull back to the BBC. We do not know if it'll get here, right? So in the process, we want to get in the habit of drawing a trend line. So as it starts approaching the green line, we're going to draw a trend line together. And I'll show you how to do that. Okay. So for the moment, we got to let it come back to the green line. All right. So What does this all mean to you? If you're in here and trying to learn what the heck's going on, we're trying to get short the crude if it gravitates toward the green line here. That's what that all means. Okay? But we're going through the process. Okay? And that's the process that you should be going through. All right? All right. So we'll let the crude do its thing. Let's just move on, and I want to show you as many examples as possible. This is the natural gas in June. Okay? A few after the fact stuff. Bullish cross. The normal thing for the market to do is pull back to the BBC. It does that. We have a blue MA1, so we're looking for a blue candle. We get that. Do we have separation? Is the green line pulling away from the cycle? We sure do. What's the normal thing for the market to do? Well, the normal thing for the cycle is to get into the green. The green line is to get into the cycle. Okay? Now, here's a good point right off the bat. Notice how the cycle went from blue, which puts all the probabilities in our favor, and it went to red, right? Okay. Number one, that waters down the probability, right? Number two, when the cycle turns red, you're required to draw a trend line. You are required to do that, okay? So the other reason why we draw a trend line is, number one, we never know if it'll get to the BBC. Here's one good example of it, right? It never got to the BBC. It never got to the BBC, all right? But if the cycle turns color on us, then the trend line is required. So you might as well get in the habit of drawing it ahead of time, all right? And we'll need a close above it. So right here, that lights the match to the long side, okay? Right here. That would have ignited the long. All right, so I know what Bart's going to say, all right? And I'm going to talk about this right now. Look what's happening right now. The market's doing the normal thing. It's doing what? Pulling back to the BBC. What do we need to do? We need to draw a trend line, okay? The market has touched the BBC, okay? We do that for two reasons. We don't know if it'll get there. Okay, it got there. The trend line's drawn. But look at the cycle. It's turned red on us, right? So the trend line is required, okay? However, we're staring at disqualifier number 2, all right, which is this, okay? If the cycle turns a different color on you, okay, number one, we know that waters down the probability. But number two, if it starts going against you at a 45-degree angle, okay, that is a disqualifier, and that's disqualifier number 2. So disqualifier number 1 is this. If the market's trading sideways, we don't push any buttons, don't touch the platform, don't touch the mouse. That's disqualifier number 2. The second biggest trap that people fall into is this. They get excited about the market action, okay? They get hypnotized by, hey, we pulled back to the BBC, and they're anxious to get long here, all right? But they ignored the fact that maybe this thing is curled over and it started to curl against them at a 45-degree angle, okay? If it does, don't touch it, because what this is implying, okay, is that the market is actually going to a bigger retracement, okay? You will avoid stop outs, okay, if you follow this rule, okay? Now, I know it's going to happen. Sometimes it'll do this, it'll go up, and you'll say, Bert told me not to do this. It's all his fault, and you'll blame me, which is cool because I'm used to it and I've been doing this forever. But probabilities are this is telling you, look, we're going to go down or we're going to chop. And chop is just another way of just driving you nuts. All right. So you're saying, well, this one you showed and it went up and man, I would have made a ton, but what about the angle of this one? Well, honest, that was curling over. That looked like a 20-degree angle or a 25-degree angle. If you have to ask yourself those questions like, is that a 45 or, is that a 30? Then don't do it. It has to be easy and obvious. Okay? It has to be easy and obvious. What's easy and obvious? Everything is the same color. Okay? Everything's the same color. All right? So again, trend lines are important. They're important for two reasons. We don't know if it'll get back to the BBC. There are two examples of that. Trend lines are important because if the cycle turns color on us, it's required. So you might as well draw in advance. Get it done. All right? And as long as it's not curled over at a 45-degree angle, all right, you have the divergence or the separation. It requires a close above it, all right? And the same rules apply. Everything has an 8-tick stop. You're looking for this green line to get into the cycle, and that's the point where you get out, okay? That's the game plan for that. So right now, this is not good. This is not a long, and you're still waiting for an up close, okay? So let's go looking for something that might be a little bit easy and obvious here. Go back to that crude oil. See how it fell apart? See, we were congesting here, and then it just fell off a cliff, all right? So maybe something's going on with the indices. We should pay attention to that. So I changed it to the S&P E-mini, okay? Note how I zoom out, zoom in, right? Are we trending? No. Okay, we got a double top in place here. Would we all agree? Double top. We got some bottoms here. So we're stuck in a range right now. And you notice dynamic support and resistance are side by side. So the S&P, there's no action there. So we're going to table it, move on. Okay, come back to that. Gold. Gold's a market that Mike's in all the time. Okay, notice the first thing I do is zoom out. Okay, I'm concerned about support here. Okay, I know we've been trending down, but now we're at the point where we found some pretty big support back here. I mean, we bounced pretty damn good off that low. Okay, so for the moment, I would table the gold for now. Okay, that's something that's not easy and obvious. Okay, but again, if we break this sucker down, okay, we had the bearish cross here. Okay, once we do that, we engage the trend line and start drawing. Engage the trend line, start drawing. Okay, different examples of trend lines being drawn. Okay, right now we're trading sideways. Okay, so for the moment, we're not going to touch it. All right, the gold is sideways for the moment, so we're not going to touch the gold. Okay, yes, there was an opportunity somewhere in here, but it wasn't easy and obvious, and sometimes that's going to happen, and you will get frustrated, and that's what trading does. So, all right, we're moving forward. The euro, Mike's got the euro up all the time. Again, here's another market that, get off that. Here we go. I'm going to zoom out. Okay. For the moment, we're sideways. Okay. Okay. We got some support side by side here. Okay. We got a little bit of a box in here. So if the euro breaks down, maybe we'll look at shorting opportunities, or if we start heading back up. All right. So we're going to sit on our hands with the euro. Okay, after the fact, here's the bearish cross. Okay, normal thing for the market to do, pull back to the BBC. Here is the first down close, which is the red candle. Okay, the cycle was blue, watering down the probabilities, but we did have the divergence, or that separation. Okay, what's the normal thing for the market to do? The green line is to get into the cycle, and in doing so, the market makes a new pivot low. Okay, it's all the same sequence. Okay, those are the opportunities you're looking for. Okay, it was watered down by this. Okay, was it curling up a little bit? As long as it's flat, you'll see this. In fact, let's see if we can't find that. I want to give you an example what might be good and what's not. Okay, because I'm giving you all the bad stuff to avoid, and for good reason, because that's where people make their mistakes. But see how we're flat here? Blue, red, blue. Okay, you're going to get into situations where it's blue and red, like it is down here. Hold on, I'm going to just, like right here, here's a good example of it, big time. Okay, this is the Mexican peso, all right? Just out of the blue, here's the bullish cross, right? Here's the pullback to the BBC. Actually, it was right here, okay? We definitely had some divergence, right? Hey, that's a pullback in this ongoing uptrend, all right? But here, it turns color on you, and this is going to happen. You'll get into the trade. You're like, oh, shoot, the thing just turned red on me. Now what? Well, it's flat, okay? It's not curling over. It's not doing, it's not doing something like this, okay? If it's flat, hey, you got it. You're going to be drawing the trend line, right? That trend line will be drawn like this, okay? It's going to be this close above the trend line before, you get crazy about getting long, okay? It's going to be that one, okay? And look, the cycle gets in. The green line does get into the cycle, all right? Now, after the fact, in real time, if I'm looking at that, there's no way I'm taking the trade, all right? Because we had resistance here. We weren't really trending. So there's just another example of, hey, you got to be careful of markets that are trending, okay? And number two, what color is that cycle? Okay, ideally the same color, and ideally a good slope to it. We can even add that definition to it, a good slope to it. Okay. All right, so let's try to sink our teeth into something. I'm talking about all the stuff not to do. All right, so let's go back to the crude. I know crude was rocking and rolling here. All right, so again, we were back here and it fell off the cliff. And like I said, the normal thing for the market to do is pull back to the BBC. And notice how it did it. No down close, no down close, no down close, right? This is our first down close, or red candle, right? Okay. See that? That's not good. All right. Ideally, we would want that red. We would rather see this, okay, over here, not this, okay? And not only that, the third disqualifier is the black step line. See the black step line? It's used for two reasons. Number one, help you trail a stop. All right, but number two, the second part of it is if the black step line pierces the BBC, okay, that's your third disqualifier. Okay, that says, hey, you know what, we might have a cycle reset. Usually a different colored cycle along with this kind of run side by side. And basically it says, I'm going to give you grief, trade sideways, or change the trend. Okay, so we went over three disqualifiers. The market's trading sideways, no trade. If the cycle turns a different color on you, which is against the trend, no trade. And if that black step line pierces the BBC, that's the third one. That's all you have to remember, 3 of them. And after time, it'll just come like that, but it comes with time. All right, so let's go fishing. All right, a good example is here's the first up close. Okay, there's the cycle. It's red going against us. That's an example where you're going to say, hey, Bert said not to do it, but it's going up a little bit. In the end, you usually break even, or actually you lose on those trades. All right, let's go down the currency list. Let's go to Japanese yen. We need to make a lower low before we can talk about selling anything there. The euro, same thing. I'd like to see it close and trade underneath dynamic support. Okay. The British pound is something very similar. Okay. The Swiss franc. Okay. So let's do something here. Make this kind of a teaching lesson. Okay. I'm going to show you how to place an order in the DOM. Here's the bullish cross. Okay. Now I don't want you to do anything. Don't touch your mouse, nothing, just watch. Here's our bullish cross. Okay. The normal thing for the market to do is pull back to the BBC. Okay. The green line is pulling away, and it's pulling away from the cycle that's blue. Okay. A lot of things that say, hey, we can go up. What you can do with the tower, because this is where we buy and sell. See this little Tinker Toy triangle up there? You notice how I left click on it? The bottom of the DOM opens up. If you select sell stop and you select buy stop, just those two, and you right click over them, go factor in ticks and factor in ticks, make that read 8. Okay, what that's going to do, all right, let me tell Paul to call back 1 sec. Hey, Paul, call back, bud, okay? Give me about an hour. Okay, if you left click sell stop and buy stop and you put an 8 in there, what that's going to do is this. As soon as you enter the market, as I'm doing now, by left clicking in the green, I'm going to create a long. Okay, I'm trying to get long. Okay, it automatically places stop loss 8 ticks away. That's one less button you have to press, one less mistake on your part. Okay, that's called a bracket order. Okay, bracket options. You left click, bottom of the DOM closes or opens. Okay, if you check off sell stop and buy stop and put the factor in ticks, okay, if you put it 8, why is 8 the magic word number? Because that's what the rule says. Okay, then that will automatically put the stop loss in. Okay, now I did this, all right, because we are getting the pullback to the BBC, but we're not trending. Okay, we're still finding resistance here. I just wanted to get inside the DOM and push a button. Okay, this gives me an excuse to do it, but this isn't the easy and obvious trade setup. Okay, but what I wanted to do is show you how to enter the trade. Okay, one way to do it is by left clicking, okay, into the green. If we left clicked in the red, that would create a shorting opportunity. Okay, and I wanted to show you how you can create a bracket. Okay, so what happens from here? Well, why am I getting pheasant run? All right, a few things. If the market goes plus 4 ticks in our favor, 1, 2, 3, 4. If the Swiss franc gets up to 98.51, we are going to move our stop to break even. That is risk management number 1. Okay? If the market moves 4 ticks in our favor, we're going to move the stop to break even. What is break even, Bert? I get that question a lot, which is fair. It's our entry. Where's our entry? It's right here, 98.47. It's highlighted here. It's highlighted here. And it's also highlighted on the chart. All right. And your P&L up here is probably moving, plus or minus, plus or minus. Okay. There's about 4 different areas to let you know what? Man, I'm long. Okay. All right. So I'm long. How do I move the stop up? I know this is my stop. How do I move it up? So all you have to do, and this is what Michael is doing, okay? All you do is left click over the number 1, drag it up, release. Drag it up, release. Left click on the number 1, drag, left click, hold the mouse down, okay, and release. That's just how you move it. That's what Michael's doing, okay? That's it. Now you notice how we're just falling asleep here and nothing's going on? Well, it's because we're trading sideways here. All right. And look at how the cycle is curling over now. That's not very good either, is it? All right. So again, the idea of doing that was just to show you, you know what? That's how you exit. That's how you get into a trade. Okay, that's what the tower is for. That's where Michael is doing all his buying and selling. Okay. All right. Let's not stare at the Swiss franc. I'm going to exit at market and cancel. See this hotkey up here? You ever want out quick and easy? Left click, you're out of there. Not only does it get rid of your position, it also gets rid of any outstanding orders that you have in the Swiss franc. Not all the orders, but just in the Swiss franc. I'm going to go natural gas. Just scrolling around the markets here. Crude, nope. Okay, we like this. Okay, if we're getting short, we like this, right? Red is good, but we got support here, so we got to be careful. Okay, so let's hang out here for a little bit. Let's hang out in crude. At least that's moving. Okay, so hang on. We got support here, so we're not trending. We're sideways here. Okay, but we'll go through the motions, so I don't want you to do anything. Okay, don't touch the mouse or anything. Okay, you're watching me. Okay, this isn't about following me, Bert. We have support here, so we're not trending, but I want to go through the motions. So we had the bearish cross here. The MA1 is red crossing the BBC, and the normal thing for the market to do is pull back to the green line, right? And in the process, engage the trend line. So that's what we're going to do. Okay, so let's see what happens. The good thing in the process, and this is what you'll start seeing down the road, is you'll start saying, hey, I got a slope, I got a red cycle, it's sloped to good. Okay, so now we are below. So now we're trending again. So here we go. We get back to the BBC, we're gonna get short. So hold on. See? We're trading below the lower low. Stand by. Okay, the market starts going up, that green line will start pulling away, and we'll have that separation we're looking for. Okay, notice the time, it's 1:30, a little bit past 1:30. The crude oil it closes at 1:30, and usually you get some craziness around there. I know that because I've been doing this for a while, and I know the personality of the markets that I'm trading. So in the end, that's what you'll end up doing. You'll end up gravitating those in the end. Come on, pull back. I'll look over here in the indices. All right, so here we go. Starting to get that. All right, here. So now we draw the trend line, right? Okay. That is a close below the trend line. So let me point that out. Okay. That is something that Michael would have taken right there in the training room. Okay. I think the guys that are CFRN members, okay, would say yes. So what I just did is I tried to left click in the red to get short. Okay. So we are short from 65.95 and my stop is here, 8 ticks away. Okay. Now we're just sitting. Blue cycle on us. That's not good for the home team. Okay. Let me get rid of that. Okay. This will be a losing trade, possibly. So that was the close below the trend line. Okay. Our stop loss is in here. Unfortunately, is right where the BBC is. So we'll probably get stopped out. But that's how you draw the trend line off the two lows there, and that's the close below the trend line. And there was separation. Okay. All right. That's one that didn't work out. You lost 80 bucks. All right. The market has done the normal thing, which is pull back to the BBC, right? Is the cycle blue? Yes, it is. Is the trend line required? Yes, it is. It's required. Not only that, a close below the trend line is also required before you can go short. What color is the cycle? It's blue. Is it curling up? Yeah, it's got a little bit of a bullish tilt to it, doesn't it? Okay. All right, so hold on. Mark's got to. Yes. So in all fairness, okay, let's do this. We can't show all the good stuff, right? This is the reality. You right here. This here, okay, is the close below the trend line. Okay, that's correct, Mark. The trend line's drawn correctly. The close is closed. The close below the trend line is correctly. It's one that didn't work out. Okay, let's be clear about that. Not all the trades are going to work out. So you better get used to that. And if you can't, trading is not going to be your thing. And were we trending? Absolutely. We were making lower lows. Okay? No, it doesn't matter. Okay? That close here. The close of that candle was 64.95. You would right click or left click right there. 64.95. That lit the match right there. Okay? So now you're saying, hey, but now we have the market did the normal thing, right? Pulled back to the BBC. Okay? That's correct. We have the down close. That is correct. You guys are all looking at it correctly. But the cycle is blue. So now we need a close below the trend line. Okay? So now it should look like this. See, it's trying to do that now, but see, it's got to add a 45-degree angle or close enough to it. So it's just, you just take it off the table. Okay? All right, we move forward. Natural gas, not surprising that this is doing what it's doing. I thought maybe the S&P would roll over here a little bit since crude was. Maybe it will. But for the moment, notice the first thing I do is zoom out. We're still competing with that double top. Nothing going on over there as much as I'd love to hit it. The gold is sideways. Here's the up close and the euro. Here's a nice bullish cross. pull back to the BBC, which is the normal thing. Okay, so it has a lot of the variables. Bullish cross, does the normal thing, pull back to the BBC. The cycle is blue. It has a nice slope to it. Boy, that's good. The green line is pulling away. It has a lot of space or separation, but dynamic resistance is trading side by side, so the market really isn't trending. Let me make a point of this, though. You know, some of those runners, okay, like this, like you get these big moves, it's usually a result of the market like barging through a door, okay? It needs a couple run at it, and the next time through, it's usually you get your runner, okay? So I'm not saying, hey, get in this trade, or hey, you should try to take those on to try to get one of those runners. They're unpredictable, all right? They happen. All right, but I'm saying when that does happen, it's usually a result of, banging down this door a few times. It just needed a running start, okay? Finally, you pushed through it, and then you get this runner. And then after the fact, you're saying, see, if I would have bought it here and I would have ran it, it would have went all the way up there. That's usually one of those, okay? So right now, it has everything I would look for except for no trend action sideways, okay? Look at that hot mess. That's a Canadian. This is where guys get chopped up. Like a lot of break evens or plus ones or minus eights. It's just be crazy. By the end of the day, you'd be pulling your hair out. But notice how I zoom out, and we were caught in a range here for a while here. We finally broke out, which is cool. All right, and here we're just stuck in that same chop again. Okay, so nothing to do there. Mark, you okay with the that crude? Remember, it's that candle, that red candle is the one that lit the match. And no, it wasn't successful. Okay, and notice that was the down close. And look at the shape of the blue. This is wrong. Blue is watering down the probabilities, and now it's going at a 45-degree angle. So here we go. Market's telling you. Okay, that little thing right there. Notice right here at this point in time, you're going to get faced with this. I'm telling you. Okay, I'm laboring over this crude because it had, it's good to talk about the bad things too. This was the down close. It was red. You had the separation. All of a sudden it turns blue on you. You're like, ugh, oh no. Well, that doesn't mean you abandon ship and get out. You have the plan. It's intact. All right. It's going to happen. Okay. So nothing's 100%. All right. Let's look. Time is it? 10:02. Gold sideways. All right. I went to the mini Dow, much as I didn't want to. Sideways. Okay. Now, as I was saying earlier, if you're just hell bent on, trading the mini Dow, the mini Russell, my suggestion is 8 ticks. Okay. But the same rules apply. The only difference is your bracket. Okay, when I left click, the bottom of the DOM opens up. Instead of reading 8, it reads 16. You're doubling the risk. But the same rules apply. Okay, bullish cross, pull back to the BBC, pull back to the BBC. Okay, we're looking for the same action. Notice here, 45-degree angle against us. When we get the close here, not good for the home team. Okay, this is better right here. We got this action that's a little bit better. This is a lot better. That's a cycle that's bullish, has a good slope to it and separation. Okay, and I'm just pulling that out right here and disregarding whether we're trending or not. Okay. Yeah, it's okay. Just keep asking the questions. More screen time, Mark, and you'll get the hang of it like that. All right. So again, the other thing is too, hey, I'm not a 4-tick range guy. I want longer time frames. That's fine too. Okay. You can do them on larger time frames. Okay. The only difference is, is the risk. The same rules apply. Okay. But if you're on an hourly chart, if you're on a 30-minute chart, okay, if you're on a 5-minute chart, the same rules apply. The only difference is if you're on a 5, a 30, or hourly, your stop loss is going to be commensurate with the time frame you're trading on. So if you're on a 5-minute chart, you got to be risking 5-minute dollars. Okay. And it's going to have to be under prior highs and lows. Okay. If you're on a 30-minute, the same business. Okay. You're going to have to risk 30-minute dollars. All right. So that's it. There's not much happening here. All right. We covered a lot of stuff. So I record these. All right. So if you're brand new, there's a lot of new guys in here. So if you're new, I recorded it. Okay. All you have to do is go out to YouTube and Google or search, CFRN Thursday under the Google tab, and you'll find them. Okay. So what I have to do is I have to decode it and then I put it out there. Okay. So usually there's about, if I'm lucky, I have it out there in the next hour and a half or so. Okay. But the bottom line is, is that if you're new, you can rely on this as a good cheat sheet going forward. Okay. Or any of those videos. And the returning CFRN guys, just remember the markets need to be trending. Get in the habit of hitting the zoom out button. That's a big deal. After the cross, get in the habit of engaging the trend line. Okay, that'll help you avoid drawing lines after the fact. You're already prepared to take action if it happens. Okay, and you got to watch the color of the cycle. Okay, like the crude oil, if it happens midstream, there's nothing you can do about it. Okay, it's not good. What can you do? All right, so that happens. All right, if you got any questions, just shoot me an email or just call me at the desk and we can go through it. Okay. And if you're having problems downloading the platform, the demo, and the indicators, call me too, and we'll knock that out together. All right. So that's it. I'll see you in the room tomorrow morning. Like I said, I'm in the background, and if not, then we'll see you next Thursday at the same time from 1 to 2.